Hi everyone, let's go over my medium time frame, low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with my medium time frame bullish scenario where we're looking for a WXY, where in Y we're looking for a triangle ABCDE for then new highs to come. This scenario was first posted in Discord by Jay-Z, where he was looking for this WXY and inside Y then an ABCDE, creating a bigger diamond pattern breaking out towards the upside. But what you can see on his chart is that he has a big wick for wave A over here. So his wave C is above the low of wave A. His wave A low is somewhere over here, creating a structure like this. But as you can see on my chart, as well as some other charts, the low of wave A is actually higher than the low of wave C, which is not allowed in a triangle structure. So that does not look really good for this particular scenario. However, in comparison to the bullish scenarios I showed yesterday, where this is the low and we're counting for a move towards the upside, this scenario does have higher probabilities compared to the one mentioned yesterday, but still, this is not nice and not what you want to see. If we then zoom in to this structure over here, basically the end of E, looking for impulsive structures towards the upside, right? Because we're looking for continuation to new highs. In this scenario, we're then looking for wave 1, 2, 3, 4, sideways 5. No overlap between 1 and 4, so diagonal is not a must over here. And in this scenario, we have a nice 5-wave count with inside wave 2 are running flat on my chart, but on some other charts, this low over here took the double bottom, so you then have an expanding flat ABC for then eventually 3, 4 and a wave 5, 4 retracing to the 0.5 fib, taken from the low to the high of 3. I also have seen counts where we have a 1, 2, 3, 4, and then people count this as a bigger 5 over here. The problem for me then again is the wick over here, right? If this is a 1, 2, 3, 4, and then you look up for 5, on some charts, the low of 4 is lower than the low of 2, which again is not allowed in an impulsive structure. So hence the reason I have a 5-wave move here, which then results in a bigger wave 1. Then we have the corrective structure, wave 2, most common target for 2 between 0.5 and the 0.786, which is between 27.3k and 26.5k, looking for continuation to the upside in a bigger wave 3, meaning that if we get a bounce towards the upside, we really want to see volume increasing as well and impulsivity increasing while price is moving towards the upside. That also means we have to look for corrective structures in this area over here, where I'm thinking an ABC. When first on the chart, I had a WXY, and I at least want to cover this. So currently for a wave 2, I'd then be looking for a potential A, B, and a wave C to the downside. But one of the scenarios I first thought of when we didn't really have this low was a potential WX and a Y. But the fact price over here took this low, invalidates this particular scenario. So that means that now in a wave 2, personally, I'd be looking then for this to be a wave A to the downside, B, and then still looking for a wave C to the downside. So a 3-wave structure over here, where for a wave B, a common target is between the 0.236 till the 886. So over here you can see price still has a little bit of upside to go before wave B is really valid. So preferably you're gonna see a move to the upside over here for a B, before then another retracement down for a wave C, potentially looking for that golden pocket or the 786 as wave A then moved to the 0.5. If we then zoom out again and go to the medium time frame scenario, but then the bearish one, we are looking for continuation to the downside. In this scenario, we have a 5-wave structure in the wave A, looking for a 3-waver in B, for then a C to the downside, another impulse to the downside, creating new lows. First of all, we have a double bottom over here, very attractive. It's like a magnet for price. Bybit, as spoken about before, took this low already, or some other charts have a bigger wick here, right? So this low has been taken, which increases the probabilities that all of the charts will eventually take this low based on statistics, which on my chart here, the Coinbase chart, it hasn't done yet. So that is interesting. So we are looking for a 535 where there's double bottom, and this being the low over here that some charts have taken and other charts haven't, increases probabilities for this particular scenario. What can also increase probabilities for this scenario is that if this is the low, for example, over here, and we're looking for price to move to the upside, I really want to see bullish CVD divergences. That's by far most common if you look for a bigger turnaround point, but we didn't have bullish CVD over here, and we still have to wait, of course, if we get any bullish CVD between this low and the higher low created. Now, if you then look at the low time frame scenario for a bigger ABC, then in wave B, we have to look for a 3-wave structure. And currently, I have a structure in an ABC or a WXY. Doesn't really matter for the target over here that we're looking for per se, but we're looking for a 3-wave structure, so an ABC, WXY, or over here we have a WXY, but the 1 to the 1.236 is an important target, has been hit. There was some nice confluence in that area as well as resistance. Just above price, however, as the 1.618 is also still a target for a wave Y or C. It's a bit more rare, but something we can't forget. We have this target over here, 29.1K to 29.4K. I think preferably you do not really want to take this high. If you're looking for an ABC, then preferably this is like a finish C, for example. But we have to see how price develops, of course, throughout the days. Now, if we then zoom into this structure over here, in the bearish scenario, then if this is the high and we're looking for downside, we want to see impulsive structures. And I have 3 impulsive scenarios for you on the lower time frames to the downside, where this is the first one over here. So we're then looking for a 1, 2, and then eventually another 1, 2 for continuation to the downside in a wave 3. But then you expect a very impulsive move to the downside, which, as you can see, is not really the case. And also this wave 2 is much longer, while this wave 2 is a lower degree wave 2 than this wave 2 over here. So low probabilities in this scenario. In this particular 5-wave move, then we have a 1, 2, 3, 4, 5, but here wave 1 and 4 have overlap inside wave 3, so this white count being a sub-degree count of this bigger wave 3. Overlap over here is not what you want to see, and in this particular scenario we then have a 1, 2, 3, 4 extended fifth over here. But then again, we do have overlap between 1 and 4, which isn't great. However, if we compare these scenarios with the micro more bullish scenario for potential 3-waver, a WXY, or if this is somehow a WXY, a WXY or a 3-wave structure to the downside over here doesn't really work. If this was the low, yes, it could have worked for upside, but the fact price made a new low increases the probabilities that we do have some sort of an impulse in this move towards the downside. It increases the probabilities for this being an impulse to the downside, for then a bit of a bounce and at least another low to be made, and then a 535 potential zigzag, or a wave 1, 2, and a potential 3 for eventually lower prices. Now, if we look at the CVD divergences, then over here you can see we have some bearish CVD divergences going on. This one already played out, this one already played out, bullish CVD divergences also already played out. And now more locally over here, lower highs on price, but higher highs on the CVD. And we also have this CVD over here from this high to the lower high, but a higher high on the CVD. However, this high over here now has a second CVD. So this was the first one, which already played out, price moving up again. This is a second CVD, and a CVD that is also taken from the left side to the right side of the most recent low. And what I always say, it's best to look for CVD divergences on the right side of a new high or low. So I just put this one on the chart to explain this, but I'll remove it now so that we can focus on what happens on the right side of the new high or the new low. Now, if we then look over here, we had over here higher low in price, lower low on blue, bullish CVD divergence here played out. More locally though, lower highs on price, higher high over here on yellow, bearish CVD, which now also has already played out. So let's see how this is going to evolve throughout the day. Then we have news as well this week, as well as today. So at 4 p.m. Central European time, we have news over here. So make sure you trade safe around these hours. And then finally, the probabilities of the different scenarios are still towards the bearish side on the medium time frame, the low time frame, and on the micro. Eventually, we look for an impulsive structure and then a wave A, B, C, or a 1, 2, and then continuation to the downside in a wave 3. But currently, from an Elliott Wave probability point of view, these are the higher probability scenarios. So I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, in my opinion. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.